You know how it is. Absolutely. Let me know, folks. Let me know. Let me know. Absolutely. How's everybody doing? How is everybody doing? Can you hear me? Testing one, two, three. Absolutely. Absolutely. Ask me anything in regards to, always got to qualify it, right? What's going on? Big Brian, 30,066. What's going on, man? When you are coming up, go ahead and mention the state or the region that you're in, whether it's Norway, whether it's in Europe, you're in Africa, in Asia, North America, South America. There's all kinds of things going on. I want you to be updated. What's going on, North Carolina? There it is. Big Brian, thank you so much for tuning in. It's good to see you. It's good to see you, man. Listen, today is anything, ask me anything day. Ask me anything day. Now, you know I got the thumbnail of the velocity banking method, letting people know how to pay any loan off. Because, and especially now, people are actually getting thrown for a loop. They're actually thinking that the credit cards and that their credit lines are bills. We don't ever want to think of them as just bills. You know why? Because what bill do you know of that you can pay and borrow from the same account, right? So that's right, you can pay and borrow the same amount from the same account. So it's $5,000, right? And what if you owe, right, $5,000 to your line of credit? Now you think, oh man, I'm out of the $5,000, right? Why do you think that way? I know the answer, because we were taught to think of money that way. That way the lender could get rich and not us. That way the bank could get rich and not us. That way the mortgage lender could get rich and not us. Now, that is not the case. Let me go ahead and look at that comment, very important comment. Hey, do you guys have private talks with people? I'd like to talk with you and help me get Velocity set up. We do. The Mystic, let me tell you something. The Mystic, the Greek, we do set up those private talks. We do give free consultations. And what you want to do is you want to make sure that info@velocityc.com, that you email me. Email me directly, info@velocityc.com. That's the email, all right? Absolutely. Let me go ahead and write it out over here. info@velocityc.com. Okay? Absolutely. I've got beautiful handwriting. Beautiful handwriting. Thank you so much for tuning in. Yeah, that's what's going on, folks. We got to think of it, no problem. We got to think of it as our new checking account, okay? The line of credit, the credit card. It doesn't matter if there's interest attached to it. I always give an outlandish interest rate. Yeah, go for it, Gregory. Absolutely. Absolutely. Look, I always give an outrageous interest rate. Why? Why do I do that? To show you that it doesn't matter. Look, 40%. I don't even know if that's real. I've seen cards go up to 30%, maybe even 39%, but never 40%. But I attach that to show you the power of velocity banking. Go ahead and ask your questions. Folks, there's no stupid questions unless you're trying to start something, all right? And as Michael Jackson said, do you want to be starting something? You got to be starting something. Okay, here it is. Monica, I need help paying off 50, okay, mortgage fast. Let's do it. Let's do it. Now, I know you mean 50K. I know you mean 50K. You can tell I'm getting fired up right now. Look, okay, so let's grab the calculator and let's calculate this out really fast. Why? Go ahead. So, Monica, did you have anything else to ask on top of that? Did you want to include any details? You don't have to, all right? But we're going to help you pay that mortgage off live. Okay, go for it. Go for it. Yeah, I'll wait. No problem. I'm going to go ahead and calculate this interest rate while I'm waiting for you, Monica, okay? Is that all right? Absolutely. So 5,000 at 40%. Look, folks, it's because I'm tired, right? I know you can calculate this in your head. Good for you. But I want to make sure that what I say on live is correct. So, okay, I've started my business in the last 6 months. All right, it's become profitable fast. Should I reinvest my profits back into the business or pay off my credit card debt? Can someone help him out with that? Gregory, I'm going to answer you, but I want to know, okay, so 1% of, thank you so much. And Gregory, I want to know, is that all that you had to ask? Because we're going to get right into it right now, okay? And those of us that don't know how to calculate this, you're going to go ahead and take the $5,000 at 40%, okay? And we're going to multiply that by 0.4 because 0.4 is what? 0.4 is 40%. You'll take the decimal, right? That's all the way to the right, and you'll move it 2 spaces, okay? So what is that? $2,000. Now remember, that's only, all right, $27,000 car at 1% as well. Okay, all right, so we're going to solve both of those for you. $5,000 at 40% is only $2,000 each year. Remember, folks, that's $2,000 a year. That's nothing. Okay? Because you're going to divide that up by months. You're not going to leave that $5,000 on the card or on the line of credit for a year, right? But it would be okay if you left it on a year. So what? Watch this. Let's say it took you 6 months to pay it off. Okay, let's say 3 months to pay it off. What you're going to do is you're going to take $2,000 and you're going to divide that by 12. That's going to equal $166 a month. 3 months multiplied by 3 equals $500 in interest. No big deal. $500 in interest to borrow $5,000. Why did I say borrow? Because the $5,000 is not yours. So remember, $5,000 at 40% is only $2,000 in interest a year. That's how much it's costing you each year to borrow $5,000. It's a great investment. Gregory, let's go ahead and, now Monica, ladies first, because you did ask the question first. We're going to get to Monica first, okay, Gregory? And then we're going to get to yours, Gregory, all right? I need help paying off $50,000 mortgage fast. All right, perfect. And $27,000 car at 1% as well. Great. So what we're going to do is we're going to go ahead and erase this and we're going to start in on your question, all right? Absolutely. How many of you know that it really doesn't matter what you make? It matters what your cash flow is. All right? It doesn't matter what you make. It matters what your cash flow is. All right? Now, Monica said, hey, I got a 50K, all right, mortgage. And congratulations on getting the 50K mortgage at 1%. All right? 50K mortgage at 1%. So let's go ahead and write that out. 50K at 1%. All right? Now, you probably got a couple years left on it. All right? Maybe 15 years, maybe 12 years, maybe, okay? That doesn't matter. Let me say it again, guys. We have to in life, all right, not just in finances, we have to figure out what it is that we can junk and what it is we can keep as far as information. Because I know you've heard it said that this is the age of information. No, we've reached the year 2020, okay? 2021. This is the 20s, all right? Now we've reached the age of insight. Why do I say that? Because you can ingest all this information, but if you don't know what to do with it, It doesn't matter a hill of beans. Case in point, if I just calculated this out for you, right, and used the mortgage calculator, which we can do, how would you know how to solve it? How would you know how to pay the mortgage off? Monica's like, listen, just get to helping me pay my mortgage off. Yes, ma'am. Here I go. 50,000 multiplied by 0.01, okay, which is 1%. That's $500, all right? $500. Now, what did I do wrong? I treated this as simple interest. And as a mortgage, right, we don't ever want to treat this as simple interest. Why? Because it's not. It's actually complex interest, all right? It's called amortized interest. And so this 1%, you can add a zero to it, all right? And then another zero to it. Because it's going to be closer to that versus the 1%. All right, and of course that's a little exaggeration, but listen, it's not going to be 1%. This is how you pay it off, all right? Whatever it is that's on your line of credit and that you feel comfortable with, you're going to, first of all, let's just say, take $10,000, and it doesn't matter if it's $10,000, $2,000, $500. The principal thing to do is to make sure that this amount that you've decided on from your line of credit, okay? You say, CJ, I don't have a line of credit. Okay, from your savings, from your checking account. The key thing is to chunk that principal. That's the key, all right? So we're gonna put this 10,000 to here. And what is that going to do? We're gonna call them, we're gonna say, listen, I wanna put $10,000 to the principal of the mortgage, the principal, which is $50,000. I want that $50,000 to go to $40,000. You have to break it down to them like that. You have to break it down to them like that. Okay? It's not mean. It's not condescending. You're clear in your instructions. That's what that is, all right? So you're going to bust that principal down to $40,000. What does that mean? That means that the 1% will now be feeding off the 40,000 versus the 50,000. Now, what does that do to the interest? Well, it lowers it dramatically. Now, remember, you still have to make the payments. You still got to make the payments, all right? But as your line of credit is filled up, remember, because you're using your line of credit, okay? Income, expenses, income, expenses, income, expenses, okay? It's doing a touch and go. Your money is doing a touch and go, all right? But the money that's left on the runway, the money that is left inside of the line of credit, that's what's paying it down. So if it's like $1,000 left, that cash flow is what's paying that line of credit down, okay? So we want to make sure that when it's filled back up, that you hit it again with another 10,000, okay? Or another 2,000, or another 300. It doesn't matter. Just make sure you're hitting the principal. You say, well, I don't have a line of credit. It doesn't matter. Make sure you're hitting the principal. Okay? That way, that interest gets smaller and smaller and smaller. Why? Because the principal is getting smaller and smaller and smaller, and because the interest feeds off the principal. So the bigger the principal, the bigger the interest. Okay? Absolutely. Yeah. So think of it as someone who's giving birth, right? And you know what I'm saying, right? And they need the host, okay? Parasite relationship, right, is going on here. The parasite is the interest, and then the host is the principal. So we're doing parasite banking here, all right? The same thing goes with the car loan, Monica. All right? Yeah. Gregory. Man, Monica, you got great questions. I just thought, it's become profitable real fast. Should I reinvest my profits back into the business or pay off my credit card debt? Very good question. Very good question. Gregory, What about this, Gregory? And I just want to run this by you. What about, instead of just leaving the profits inside of the checking account, what if you left your profits inside of the credit card? How much cash flow are you leaving behind? Would you rather have your cash flow subject to inflation or subject to paying off that credit card debt? Free and clear. What are your thoughts on that? What are your thoughts on that? Do you see the power of using the line of credit? Do you see that power? Absolutely. Absolutely. Because instead of subjecting it to about 2.34% to 3% inflation, right? That $1,000, that $2,000, that $50,000, that's Gregory's $70,000, $100,000 cash flow is going to do what to the line of credit? It's going to fill it back up because it's staying there. Okay? Do you have positive cash flow? Then that positive cash flow, instead of sitting in the black hole account, right? It can be working down that credit card interest simultaneously. Okay? Simultaneous banking. Let's do it. Hey, thank you, man. Thank you so much. I really appreciate that. So how about both, right? What about reinvesting your profits back into the business and paying off that credit card debt? You see, with Velocity Banking Method, folks, you can do both. You can do both. You can do both. Absolutely. Yeah, it's not either or anymore. Huh? It's not either or anymore. Let me go ahead and clean it out. It's not either or anymore. You can do both. All right, Gregory? Listen, if you need help with that, listen. info@velocityc.com. That's what we're here for. All right? Boom. Yes, that's what I wanted to ask. Started my business in April. My business model is I sell. Yep, there we go. Yep. It's around $1,000 at 40%. Yeah. Should I reinvest? Yeah, you can do both, Gregory. Go for it. Go for it. Absolutely. Yeah. Hey, keep them intact is all I'm saying, man. Protect your investment. All right. What about insurance, Gregory? All right. Sounds like we got some talking to do, folks. All right. Absolutely. Customized strategies, customized consultations. If you're a member, you get first priority, right? Absolutely. Absolutely. Amy's a member. Mark is a member. Thank you from Jacksonville, Florida. Hey, Q-Dog the Terror, what's going on? Yeah, I remember you. I started putting my income into my line of credit instead of that black hole account. My life has changed for the better. I tell you what, man, and it's going to get better. And it's going to get better. Dre, thank you, man. You know, any credit cards that act as personal lines of credit besides Upgrade Card and in any bank that is easy approval for personal line of credit, write this down. Dre, thank you so much. I want you to write this down. Pin, Fed. Yeah. PenFed. Regions Bank. TD Bank. All right? Navy Federal Credit Union. Your local credit union. They seem to be much nicer and engaged in a relationship with the customer than some other institutions. Absolutely. Matt Dre, that's a great question. Thank you so much. Absolutely. Escrow's eating me up. It's eating you alive. Uh-oh. Escrow's eating you up, huh? Unrelated question. All right. How do I speak as passionately and confidently to you? Hey, man, you know what, Gregory? That's a very good question. So how do you speak as passionately and confidently as you? I tell you what, man, it does take work because sometimes what? Those butterflies, right? Sometimes they take over. But, man, what you got to do sometimes is you have to get full of the information that just makes you excited, man. You know what I mean? And then you just got to let it fly. And really, you got to not care, right, what people think, man. Absolutely. You just got to let it fly. You got to let your personality out there, man. The world is waiting for you to let you out. The world is waiting for you, the real you. Absolutely. Great question, Gregory. Absolutely. And we got some information on that as well, Gregory. Just let us know, okay? info@velocityc.com. What's up, Z? How you been? Hey, Jose, I've been living really good, man. How about yourself, man? That's right. Hey, it's going to be more, man. It's going to be more. I'm looking to do this 6 days a week. 6 days a week. There's some things that have come up, man. Let me address this real fast. I'll get back to your questions. There's a new banking system, okay, that is trying to come up on the scenes. We Velocity bankers have nothing at all to be concerned about. However, it is going to affect the crypto markets because this person who is in the banking scene, they don't like crypto. They don't like crypto. So please be wise with the cryptos. Make sure you're hedging that investment so that you don't get taken to the cleaners. All right? Absolutely. We're living in a wonderful time. You just got to make sure that you know how to surf. You know what I mean? You got to make sure you know how to surf. This is what I mean. There are a lot of people that are fearful of waves, okay? Because they don't know how to surf. But if you're a master surfer, waves to you are fun. Why? Because you know how to manipulate around those waves. Cowabunga, all right? We got to make sure that we're screaming cowabunga. We got to make sure that if we don't know how to go around the waves, that we got to get connected with a community, all right? That's why we have a community, Velocity University as well. info@velocityc.com. That's why we have memberships, okay? These will be coming to you every day, but the members are what's going to get the detailed, customized info, all right? So let's go ahead and continue on here, all right? I have 9K 401, Big Brian. You want to use it for credit? Yes! Whoa! Man, that's awesome. That's awesome, Big Brian. Do it, man. Do it. And don't be afraid. I'm just starting my food business and I need some advice. Absolutely, Dane. That's what we're here for. Okay? If you're starting a food business out, if you're just starting a business, that's good. All right? That's the best time to get connected with us. info@velocityc.com. Okay? Why? Because we're going to tell you this is how you build business credit while you're first starting out. You got to make sure that you have that professional email. You got to make sure that they know about your credibility. You got to make sure that you're not jumping the gun and getting these credit cards all ready and you haven't gotten any store cards, you haven't gotten any fleet cards, you haven't got any net 30 accounts. You got to start in baby steps. Why? Because lenders see that. You see, it's not about getting the biggest and the best at first, all right? It's about your track record. That's what the algorithm follows in the big businesses and the business accounts. They're going to look at your track record and they're going to say, well, oh, okay, so this guy started a business and all of a sudden he wants a business credit card. Next. That's what the algorithm does. Yeah. Hey, man. Let's be wise, all right? Let's start out good. Call, right? info@velocityc.com. Connect with me, all right? We'll show you how to make your business credible. For instance, do you have a 411 national directory? Is your phone number in there? Okay, if it's no, you got work to do. Do you have a professional email? What's a professional email? Attached to my website, okay, velocityc.com. My website is getting updated right now. We're revamping the whole thing. It's getting bigger, folks. I'm coming out with a class as well, a new class, okay, strictly for members as well, all right, and it's going to be amazing. We're going to go deeper in the mortgage interest calculations and formulas so that you are not lost when the lender comes to you and says, hey, congratulations, you got a 3% mortgage. You can understand that 3% is not 3%. It's 3% times 2 add a 0, 60%. This right here is 1% times 2 add a 0. But congratulations anyway, though, Monica. That's a big deal. 1%, no joke. If I were you, I'd talk to whoever I need to talk to before I get permission to go and get extra lines of credit. Because when you get extra lines of credit, what happens to your credit utilization? Listen, this is your, man, this is your utilization when you get extra lines of credit. So when you get, oh man, I gotta wipe this off. Hold on, y'all. Watch this. I want you to watch this illustration here because it's going to be powerful and you'll never be the same after you watch this illustration right here. Watch this. See, I hope you're watching this. You were supposed to call me a huge show that I'm about to be on 44 minutes ago, but that's okay. We can reschedule. I know you're busy. Man, you don't have to tell me. Hey, when your credit limit goes up or you add more credit, right? When that goes up, your utilization goes down. So this is your CL, right? And this is your CU. Take a picture of that. When your credit limit goes up, your credit utilization goes down. Monica, if you get mortgages at 1%, and you're getting all these deals, you know what that tells me as a lender? As a lender, that tells me, now I'm a realtor, right? But that tells me, and I've worked with lenders, all right? Shout out, okay, to Movement Mortgage up in here. Shout out to Nova Loans up in here. Shout out to Intro Lending, to eXp Realty, eXp Commercial. All right. Shout out to Keller Williams up in here. Goodness gracious. I love working with every one of you. Shout out to Long Realty. Remax. Listen, that tells me as a lender, Monica, that I need to give you more money. If you're getting rates like 1%, that's a line. Look at that. And I'm like, well, wait a minute. I want to give you my money too. Why? Why am I thinking like that as a lender? Why, when I see interest rates at 1%, at 0.9%, at 2%, at 3%, why do I get elated and scintillated, all right, when I see those low numbers? Because I'm missing out on money that I could be making this low number right here. Monica, congratulations. You deserve a huge shout out, all right? You need to be a member so that you can have access 24 hours, 7 days a week, so I can talk to your car dealership, so I can talk to your bank, so that you're a great example. Thank you so much, all right? Absolutely. Those who are making negative cash flow, you're a great example as well. All right? Listen, folks, we are taking over the Velocity Bankers because we know how to move money. Let me get back to this. 1%, all right, tells me that I'm missing out on money because that 1% means you're a low risk. You are very low risk. That's what that 1% tells me, all right? So when you're low risk like that, I don't mind giving you the money. Because I'm all about managing risk as a lender. That's what they look at. You ever notice how banks, they don't take that much risk? How they make money off of other people's money? What? They use other people's money to leverage their own money? Let's learn. Let's learn, all right? 1%. Go ahead and let the lenders know that you're open for business. But don't forget to interview them. That's right, you're interviewing banks now. 1%er, you're a 1%er. Hashtag 1%er. Absolutely. You do need a game plan, Big Brian. Let's go ahead and hook that up. You can email info@velocityc.com. Hey, no problem, Gregory. No problem at all, man. Let me know how that goes. All right? Listen, we take care, all right? And we absolutely let people know, all right? And follow up with people. That's what I love. Sergio, love your working energy. CJ, looking forward to working with you. Absolutely, Sergio. I am looking forward to it too, man. Hey, let's do it. How do I use Ismara? Ismara, very beautiful name. It's so beautiful. Man, I hope I didn't jack it up. My name is Kanan J. Okay? Ismara. All right? Very beautiful. How do I use my savings to do velocity banking with a personal line of credit? That's a beautiful question. All right? Let's go ahead and address that right now. We want to clear the board for this special question right here. First of all, I got to say that we do have software, right, that all you have to do is punch in your numbers and it spits out what you're supposed to do in each day of the week, right? So maybe 2 weeks from right now, you'll put it in the credit card, and the credit card will pay a loan or your credit line or your savings account, and your savings account will pay the line or the loan, so that you can, instead of paying that mortgage off in 30 years, you can pick it off in 5 or less years, simply because you are making sure that you pay down the principal in the correct time. Very good question, Ismara. Let's go ahead and do that. How do I use my savings to do velocity banking with a PLC? Let's do it right now. Turn the time card in. Oh man, look at this. All right, look at this. Let's do it. So let's say you have $1,000, okay, in the savings account. And like I said, it doesn't matter, right? It doesn't matter what's in the savings account. It matters what's in your cash flow, because it's the cash flow that's going to pay off that line of credit, and it's the line of credit that's going to pay off the loan. Should I write it down? Write it down? Yes, I will. Very good idea. Let's go ahead and just start with the savings account. We're going to draw these little squares, right? Savings. Great. Then we're going to place that savings where? Where are we going to place it? Where it can work. That's where we're going to place our savings. Let me say that again. We're going to place our savings in a place where it can work. While it's sitting at the bank, or while it's sitting like decaying anywhere in your safe, right? It's losing value at the rate of 2.34% each year, and it goes up. It's losing value. So why not place a portion of the savings inside of your personal line of credit, your PLOC, okay? And then when the PLOC is filled up and there's no more balance, did you know that's a bad thing? Why? Because the money's staying still. And anything that's still is what? Dead. Because it's not moving. It's called the principle of life. You gotta keep moving. That's why many of you have paid off your mortgages in less time. You've kept the money moving. All right? It's a new philosophy, right? It's coming off of the accumulation mindset and going more towards the cash flow mindset. Okay? And a lot of you are using it very responsibly, how it's supposed to be used, like Ismara. All right? Look, savings to PLOC, and the PLOC is going to pay the loan. All right? Absolutely. Easier said than done, folks. I know. Don't worry. I know. It's not like I grew up with this, okay? It's not like my wife grew up with it either. She saw her credit limits on her cars just go up. Why? Because the lender was seeing, my goodness, she makes massive payments. We knew it wasn't a payment. We knew it was a transfer, but we'll let the lender think whatever they want. Thank you. You know what I mean? Absolutely. So let's use a portion of the savings. And that's why I said a portion, right? And not all of it. I know that sometimes, hey, people want to do different things with their savings, and that's okay. That's why if you need a more detailed or more customized, right, look at the finances and a calculator to go with it, just let me know. info@velocityc.com. From savings, you're going to put a portion of that into the personal line of credit. You're going to watch that balance go way down, all right? And then if you have any loans, you're going to pay it from your line of credit. Because essentially what you're doing is you're switching this amortized loan, this amortized interest, and you're switching it with simple interest, okay? Which is much better for you and your wealth, all right? So from the savings, take a portion from your savings to the personal line of credit, and then hit that loan with the line of credit. Now remember, each time the personal line of credit is injected, okay, with that savings money, remember that cash flow is what's paying this down, okay? The cash flow is what is paying that down. Ismara, thank you so much. Peace, be free. That is what I want to do. Perfect, Ismara. Let's go ahead and do it. Go ahead and do it. Absolutely. No problema. No problema. Yes, yes, Big Brian. Let's get you on a game plan. No problem, Ismara. God bless you. Thank you so much. That's a great question. That is a great question. And of course, we have, right, the Velocity Banking, United Freedom Financial, and Velocity Channel has teamed up, and we have software, right? We have software that we can give you access to. Just let us know. info@velocityc.com. That's what we're here for. All right? Absolutely. Man, these jokers, they were like, we were giving people loans, right? But then they were defaulting on them. And we felt guilty. I know it's not funny. I'm sorry. We felt guilty because we couldn't, like, there was only so much we could do, you know, regulatory wise. And so we came up with this software to help people who got mortgages, who got these loans, who were horrible at money allocation and financial allocation. And they said, man, we came up with it and it took us years to perfect it, but we perfected it. So now all you have to do, it's gone through a CPA, it's gone through an account manager, it's gone through all these different, even a mathematician, a professional mathematician. I'm talking about, I think it was linear mathematics or something like that. Have you ever heard of linear mathematics? Higher than calculus? My word. Okay. So they were like, man, we needed to make sure that this worked. And they did it, man. So now all you do is just punch in some numbers, pay that mortgage off in a year, 2 years, 4 years, 5 years. Let's go ahead and get to your questions. What do you think, Dre? Great question, man. About using a personal line of credit, all right, to invest into the stock market instead of using margin. Dre, I have never, ever thought about that ever before, man. Do you know that it's much safer, too, than a margin? Oh, my word, Dre, that's very good. So let's say you are stuck and you're like, man, should I use margin or my line of credit? And this is a philosophy that I use. If I have $5,000, right, in my line of credit, all right, and I need to utilize, and let's just throw out this number for easy math, for margin, 5,000, right? Which one do I use? Which one should I use? I'm going to use the tool that's going to prosper me both economically and credit-wise. Yeah, economically and credit-wise. So what does that mean? That means, right, the margin is good. I can profit off of it if I know what I'm doing. Right? I can profit off of the margin. But what is going to happen to my credit when I do? When I make that extra $5,000 from the margin? If I borrow from the margin, what's going to happen to my credit? Do they report the margin? But I do know, right? I do know what they report on the line of credit. They will report that. They'll report that I paid it back. They'll report that I'm under 30%. They'll report that I'm using it, right? They'll report that I'm paying the 1%, that I'm keeping the 1% balance, okay? So that they don't drop my credit score. Did you know that? Got to keep a balance on some of these cards, man. At least one. Absolutely. And that's okay because we're using them. They're penalizing people for not using the velocity banking method. Did you know that? So look, the line of credit is both economically sound and credit sound. Does that make sense, Dre? Absolutely. That's a great question. Yes. So go ahead and always remember that the risk is never in the investment. Never, ever. Where is the risk at? Somebody answer me. Where is the risk at? It's never in the investment. The risk is always in the investor. Because it is the investor that chose that investment. Remember the fundamental analysis. Remember the technical analysis. All of it matters. One matters to trading, another matters to investing. Absolutely. Yeah, you want to make sure that you're profiting in all perspectives, right? Remember, once you do something, make sure that something does the other things as well, all right? Absolutely. When you put yourself out there, make sure you're on every platform at the same time. Make sure you also have a podcast so everybody is hearing you. You don't want to do one at a time. You always want to do it all over the place, all right? One action can equal 100, all right? Folks, thank you so much for tuning in. It's 42 minutes, all right? We're working on doing this every day. Just stay tuned, all right? And we will definitely bring you some more gems every single day. Let me know your questions. You better write them down. You better write them down and ask me, and get ready for an absolutely long explanation. Okay? Perfect. All right, folks, listen, thank you so much for tuning in. We will catch you later. Thank you. God bless.